Hello investors and traders, today I'll speak about 3 dividend stocks, nice 3 dividend stocks to buy right now and of course receive a stable dividend cash flow of passive income. So let's start with the first company for today, it's J&J, Johnson & Johnson. So as we see on the chart, it traded in a decreasing channel. The momentum indicator is now 48 and here I'm expecting to see this stock much lower towards the end of this year. I'm expecting to see it's here in the upper border of this increasing channel, and in this case the potential to grow is about 20%. Of course it's a dividend paying company, the dividend yield around 3%, and let's have a look on it fundamental parameters. So look, the market cap is more than 400 billion bucks. If we'll speak about the valuation now, P ratio is 23. It's by the way the near the average for last 5 years, and the PS ratio 4. So also I think it's the average for last years. Let's have a look on the revenue. We see that the company continued to increase its revenues. 5 years ago it earned 81 billion bucks, and now for the last year it's very close to 100 billion bucks per 1 year. And of course the net profit margin is quite impressive. We see net income margin is 19% and gross profit is 68 for such company from a healthcare sector. Of course it's very high and good margin. If we will look at the revenue breakdown, we see that by source of business, that most of its revenue, more than half pharmaceutical business. Then we have around 30% is medical devices, and consumer business is about 15%. If you'll check the revenue in by source earned by country, we see that most of it, of course, the US, and the 25% is in Europe, and of course we have Asia and Africa about 70%. Let's have a look, of course, at the dividend. We see that the dividend yield last years is very stable. By the way, the company here, we see that the company continued to increase even its dividend payments, dividend per share, and the payout 66. So here the company even can continue to increase its dividend payments. So as for me, J&J, it's a great stock with a high marginal profit business, and of course the dividend yield 3%. The company continue to pay its dividends and increasing dividends. And if we look at the chart, so now we trading very close to the pre-coronavirus pandemic levels. So why not to buy such a nice dividend stock in your portfolio. The next stock for today is Verizon Communications. Its dividend yield now is 6.5%. If we look at the chart, so last 10 years we traded in a range between 61 to 80 to 38. Now we, by the way, traded at a lower border of this range, and the momentum indicator is now 36. So it's telling us that the stock already oversold, so it can be nice levels to buy Verizon stock with the ticker VZ. Let's have a look on the fundamental parameters of this stock. We see that it's quite a big company, market cap more than 100 billion bucks. The valuation, now it's a good time to buy the stock. We see a P ratio only 7. It's very cheap. It's it's better than it was 2 years ago, 3 years ago, when it was 12, 15, and the PS ratio, by the way, also very low. It's 1.2 if I'm not mistaken. The average PS ratio now for S&P 500 is about 3, so it's very cheap stock. If we look at the marginality, the revenue, we see the revenue very stable for last 5 years, and the marginality even increased in last years. Now the net profit margin is about 16%. So in such for such sector, it's I remind you that it's communication sector, information. It's by the way, the company operates through the Verizon Consumer Group and Verizon Business Group segments. The consumer segment provides consumer-focused wireless and wireline communication services and products, and the business, of course, offers wireless and wireline communication services and products, video and data services, corporate networking solutions, security and managed network services, local and long distance voice services, and the network access to deliver various Internet of Things service and product. If we look at the revenue, so most of all of its revenue is earned in the US. So in the core business in the USA, the dividends. So look here, the dividends increasing the dividend per share, and by the way, now we have a nice dividend yield of more than 6%. Of course, it's great, it's a lot. And here the payout is very low, it's only 51%. It means that half of its net income company pays as a dividend. So here is great room even for Verizon to increase its dividend payments. And the last stock for today is WBA. It's Verizon. It's another company from a healthcare sector. If you look at the chart, so here I think it was an impulse. It was the first wave, the second, the third, the fourth, and the fifth. So here most probably the fifth wave finished, and I'm expecting to see a bounce from this level. So actually we may see the start of increasing in this stock. The dividend yield more than 5%. I think it's a lot, it's very nice. And let's have a look on the fundamental parameters of this company. The market cap $30 billion. This company engaged in provision of healthcare and retail pharmacy services. It operates throughout the following segments: US retail pharmacy, international, and US healthcare. If we look at the valuation now, it's very cheap. Look, the PE only P ratio only 7, and the PS is 0.23. It means that for 23 cents you can buy one revenue of this company. So believe me, it's very cheap. The marginality last year is increasing. It was about 1%. Now is for the last year it's more than 3%. Net margin is increasing. The revenue is very stable. So it's a good sign. So net income margin 3%, and the gross profit is 20%. So it's not so highly marginal business, of course, but please pay attention for last 5 years in a row the company was stable, profitable. So it's also a positive sign for me. If we look at the revenue breakdown, we may see that the pharmacy business giving the company more than 60%. Also we have retail business, wholesale, and of course healthcare, but it's only 1%. If we look at the breakdown by country, US of course 83%, of course, and we see here Germany for 8%, and UK about 6%. Let's have a look on the dividends. So the company, we see dividend per share is increasing for last at least 5 years, and the last data for dividend yield is more than 5%. Of course, it's great, it's a lot. And let's have a look on the free cash flow. Here we see that the amount of cash for the last year is more than $1 billion, and the free cash flow of the company is more than 2 billion. And please pay attention to this dynamic. Last 3 years the company, the amount of debt is decreasing. It was more than 40 billion bucks, now it's only 36. Now in an environment of elevated interest rates, the Fed fund rate, and remind you, is now 5%. So it's also the management of this company, I think, is doing very healthy and very right things. by decreasing the amount of debt, because the interest and of course the interest payments now can become very significant. So as for me, it's a very cheap company. The PS ratio very low, is less than 1. It's the momentum indicator is telling that it's already oversold, and of course from its high levels we can see that it's down more than 50%, and the company pays dividends more than 5%. So as a dividend stock, as a dividend investment for receiving quarterly dividend payments, I think it can be a nice and a great opportunity to add this stock to your portfolio. So of course, if you like this video, press the like button. Don't forget to subscribe to my channel if you like dividend stocks, technical and fundamental analysis of the stock market, if you're interested in general investing. So thank you for watching, and see you on the next time. Bye.